The Ides of March didn't work out too well for Julius Caesar, and they're not working out for markets either. Just like members of the Roman Senate conspired against Caesar in 44 BC, this week's inflation data and simple exhaustion conspired against investors. The S&P is finishing out on a weak note, though it's roughly unchanged on the week and still up around 2% on the month. Interest rates are the problem, with the 10-year Treasury note yield up more than 20 basis points to 4.3% in a week. Gold pulled back a bit this week, but U.S. crude oil futures finally punched through $80 a barrel, with Brent crude internationally topping 85. Oil prices here are now up more than 12% in the last 3 months and starting to break out to the upside. Investors had to cope with news the CPI rose 0.4% on the headline and core in February, while the PPI rose 0.6% overall and 0.4% excluding food and energy. It was generally hotter all around, and it comes ahead of next week's Federal Reserve meeting. While no one expects the Fed to cut rates on Wednesday, Wall Street will be closely watching to see what the Fed says about the outlook for the remainder of 2024. This has been Mike Larson, editor-in-chief at MoneyShow. Have a great weekend.